On to your market news now. Asian markets suffered fresh losses today, extending the previous day's negative run. This as emerging markets continued to get bludgeoned in light of fears that trade tensions between the United States and China are set to get even worse. Japan's Nikkei share average closed down 0.4%. Hong Kong stocks got hit even harder, with the Hang Seng index declining by 1.3%. Chinese investors are naturally very concerned that today President Donald Trump could pull the trigger on that 25% import tariff on about $200 billion worth of Chinese goods. The Shanghai Composite Index slid 0.5%. And over the United States, the Nasdaq fell more than 1% on Wednesday night, that is last night, dented by technology stocks after Facebook and Twitter executives got a grilling from skeptical US lawmakers. Investors are reacting to fears that social media companies may become the subject of heavy regulation as a result of lawmakers' skepticism. The Dow Jones Industrial Average rose 0.09%, the S&P 500 lost 0.28%, while the tech-heavy Nasdaq Composite dropped 1.19%. And so now we cross over to Arabile at the JSE for him to give us a breakdown of what's going on. Arabile?
Yeah, well, clearly the market may have not gotten any impetus out of Asia and particularly the United States yesterday, but it does seem to be headed into the green. Perhaps the sell-off in recent days has been a little too hard, but one would think that considering the 9 days of gains that we had not so long ago, would certainly have been a different picture altogether. But the market itself is in the up today. Even the rand itself looking a whole lot better. Let's unpack how the local and European markets are faring. That current account deficit figure, as you can tell, they're helping the rand somewhat. 3.3%, a lot better than the 3.4% expected by analysts as well. That helping the rand now to move to around 15 rand and 30 cents. Still probably not the mark we're looking for. But Martin Harris, analyst at IGSA, joins me now as we unpack that and some company news to have come out. Martin, thank you so much for the time. I suppose taking a look at the market itself, there seems to have been a drawdown in the JSE of late, but it's beginning to perhaps look like levels it maybe should be at. What are your thoughts on that?
Thank you for having me, Arabile. Definitely the weak rand has impacted a lot of stocks, and so we've got, whilst the JSE is very heavily weighted towards offshore companies, so you've got companies like Naspers and the like who earn most of their money offshore, and so that's pulling the JSE higher by having the weak rand. But then it impacts the local guys, the banks, insurers and so on, who then really are a reflection of how our market is doing. Today the bank's up slightly because the rand has strengthened from around 15.60 down to 15.40. But really over time we've seen a lot of weakness from local companies and a lot of strength then from the offshore businesses. Yeah,
the financials themselves also up nearly 2% as of around 1 o'clock or so as well. The rand hitting 15.30 and as you can see there, 15.29, that mark is officially, that certainly isn't the mark we wanted. We expected it to be below 14 rand. Is that the new normal?
I'd like to think it's not the new normal. I think what we have seen is, we've heard this term of contagion, where there's a lot of emerging market sell-off due to various circumstances. So we've got, if you look at Turkey, they've got sanctions imposed on them by the United States. You've got Argentina, who have an IMF bailout that's due. They're looking to draw $50 billion from the IMF to solve their financial crisis. And so that entire market has taken a risk-off approach towards emerging market currencies and emerging market assets, and so people are withdrawing their funds from emerging markets. What doesn't help is that South Africa is not enticing investors. We saw just the other day we have entered into a recession, and so until we get some policy changes, we're not seeing any growth environment from South Africa to really fight off these weaker, broad emerging market sell-offs.
Yeah. When we had a recession the last time, back in 2009, we fell for 3 quarters. Do you see us falling for 3 quarters here as well?
There's potential. Hopefully we can recover. A lot of the recession was due to agriculture. That agriculture number is affected heavily by the drought that was present in the Western Cape, through to the Eastern Cape and Northern Cape. But so agriculture should bounce back. But and tourism was also heavily affected due to the drought. So hopefully those numbers can bounce back. And I also understand that Nene's got some tricks up his sleeves coming up with hopefully a growth stimulus plan, and we can try and get some short-term recovery for the South African economy.
Yeah. Let's talk about some company news now. FirstRand coming out with their earnings as well. Perhaps a better picture from them than expected. However, they don't have Africa to fall back on, so they have to work really hard.
Sure. So FirstRand, everyone will know their brand, sort of FNB Bank, as well as Wesbank and RMB. They also have a UK business called Aldermore, that's right. And so the acquisition of Aldermore has boosted their balance sheets. I see that their headline earnings per share up 12%, and they've also increased their dividend. So you're getting a dividend of around £2.45. FNB doing particularly well. That's really driving the FirstRand price. And what we'll also see with FNB, you know, they sell a lot of products to their banking clients, and coming up they're also going to be selling the division of Discovery Card to Discovery, and so they're set to get quite a windfall in profits from that sale.
Yeah, as you said there, that FNB branch up 16% on this basis as well. You saw Westbank, however, falling 9%, which is perhaps indicative of that car market. But I wanted to switch over very quickly as well to Sanlam, also getting around an 8% increase in net value from financial services as well. So clearly still doing better than expected, despite consumers perhaps not wanting to engage in that insurance sector and rather focusing on the necessities here.
No, you're absolutely right, Arabella. You know, a lot of people see insurance as a grudge purchase, and so you can see that Sanlam have also attributed lower South African sales to a very overstretched South African consumer who will underinsure or not get adequate insurance when they feel their lifestyle has been tightened. So the business has posted a 10% increase in revenue, but most of that's coming from their outside of South Africa.
Yeah.
So their South African sales are actually down 1%, but generally positive. Share went up by 0.5% today to 77 Rand 14 cents, but it's down considering where it was during the year. It reached a high of around 95 Rand in February.
Yeah. Martin Harris, appreciate your time, but it's around 0.25% to the good. The JSE All Share has turned positive, and so too has the top 40. Martin Harris is analyst at IG South Africa, helping us to unpack the markets. That's where the buck stops this afternoon. It's back to Nompumelelo and Zinga right after this.